Good afternoon, everyone. Thank you for being here with us today. My name is Indira Diaz. I am Cementos Argos IRO, and I will be hosting today's conference call. First, I would like to ask you to please read carefully the legal disclaimer that is currently being projected on the screen, which is also going to be available on the presentation that will be posted on our website shortly after this call. Now, I would like to welcome Juan Esteban Calle, our CEO, and Felipe Aristizabal, our CFO, who are going to share some important remarks with us before we open the Q&A session. Juan and Felipe, good afternoon to both of you, and please go ahead.
Thank you, Indira, and good afternoon, everyone. On September of last year, we announced that we had reached an agreement with Summit Materials to combine our U.S. assets. This transaction, as you are likely aware, was approved by Summit Materials shareholders last Thursday, with approximately 99% of the total votes being cast in favor, and was closed on Friday following the completion of certain conditions set forth in the agreement. We were extremely pleased with the high percentage of votes cast in favor of the transaction, which supports our vision of the significant potential that we expect will be unlocked for both companies, Summit Materials and Cementos Argos. Together, we expect to create a leading vertically integrated building materials platform with national scale, built on shared values, a strategic vision, and complementary capabilities, allowing us to tap into new possibilities that were difficult to reach on a standalone basis. This new platform will be the fourth largest cement producer in the United States, with an approximately capacity of 11.8 million tons per annum. The sixth largest aggregates platform, with reserves of over 5.5 billion short tons and annual sales of around 70 million short tons, and one of the largest ready-mix producers, with more than 220 plants and more than 1,800 mixers. Additionally, the platform's robust logistic network with access to imports, rail cars, and terminals will be fundamental to meet local demand needs. For the combined entity, pro forma EBITDA will be approximately $1 billion, including synergies, which are estimated to be over $100 million of incremental EBITDA, with approximately 50% realization within 2 years, derived from optimized sourcing, enhanced operational efficiency, increased network utilization, and a platform with a proven track record to increase the use of alternative fuels. Considering the revenues generated by Summit and Argos North America over the past 12 months and an estimated EV of $9 billion, the combined entity will rank as one of the largest US-based companies in the building materials segment. With this transaction, our U.S. assets were valued at $3.2 billion, which is 1.5 times higher than the market value of the entire company on the Colombian Stock Exchange, supporting our idea that there is still a gap between the real value of our company and the market value of our stocks, and reinforcing in consequence the importance of the Sprint program and the continuation of these initiatives. Felipe will now discuss this further.
Thank you, Juan, and good afternoon, everyone. Regarding the valuation of the U.S. operation, from the total $3.2 billion, we received approximately $1.2 billion in cash and $2 billion represented by approximately 55 million shares of Summit Material, which grants Argos a 31% participation in the new combined entity. In terms of governance, we have a proportional participation on the board of Summit Materials. We have appointed 3 individuals to Summit's board: Jorge Mario Velázquez, the CEO of Grupo Argos, Juan Esteban Calle, and Irene Moshuris, who has an extensive career in industrial and construction companies, as well as previous relevant experience on boards and board committees of other companies listed on the NYSE. This transaction is a new milestone for Cementos Argos and marks a crucial landmark in value creation for our shareholders. As of January 11th, Cementos Argos implied enterprise value sat slightly above Argos USA's valuation. This means that Despite the recent appreciation of our stock price, the market is not giving credit to the close to $300 million of EBITDA generated by our LATAM operation. This deal positions the company to take full advantage of growth opportunities with the enhancement of our non-US business through ancillary agreements, unparalleled growth opportunities by taking advantage of our integrated footprint in the region, and a step forward to continue leading the industry in sustainability and innovation. I will now discuss the one-off impacts of the transaction in our financial statements. In terms of the income statement, we will register a gain on sale of approximately $1.2 billion in the first quarter of 2024, which will appear on the line of discontinuing operations, positively impacting the net profit of the company. This figure includes a marginal tax payment of around $8 million. In addition to that, this result also includes an estimation of the deferred taxes that will be registered under IFRS. More comprehensive information on this matter will be openly communicated to the market as we progress on our debt optimization structure. With the closing of this transaction, there will also be important recurring changes for Cementos Argos Financial, and I would like to briefly discuss how this will look as we will no longer consolidate the US operation. Moving to slide 8, we expect revenues to be around $1.2 billion instead of $2.8 billion and an EBITDA of around $300 million compared to the 2023 guidance of around $600 million. We expect net profit to be close to $200 million, which is 3 to 4 times the normalized net income over the recent few years, resulting from an operational results plus the equity method applicable to the 31% stake in the new combined entity. Also, we expect to use the entire $1.2 billion in cash to pay down debt. These prepayments will result in a 70% reduction in an overall debt. Furthermore, a substantial reduction in the company's financial expenses is anticipated to unfold progressively throughout the year as we implement the debt repayment strategy.
Thank you, Felipe. I would also like to stress the importance of the ancillary agreements that surround the transaction in 4 main pillars. 1, the cement supply agreement from Cartagena to Summit's operations in the US, the logistics agreement with our trading division to supply materials from third parties, the service agreement with SUMA, which is our shared service center, and the intellectual property agreement to collaborate on IT, innovation, and sustainability. These agreements are strategically positioned to take advantage of our leadership in sustainability and innovation and exploit some nearshoring sourcing opportunities from Colombia and Central America and the Caribbean to complement the future avenues of growth of Summit in the building materials industry. To finish, I would like to highlight the fact that all the 4 initiatives of the Sprint program that we launched in February of last year have been successfully carried out to the date, with important results in both our ordinary and preferred shares that experienced valuation in US dollars of 107% and 122% respectively during 2023, overperforming versus the Colombian stock market and most of our international peers. Nevertheless, we still believe that the current market valuation of our company is below its fundamental value, and in that regard, we will continue to carry on with the existing Sprint initiatives and develop them further.
Thank you both, Juan and Felipe, for your interventions. We will now start the Q&A session. For those connected, please remember that you need to raise your hand with the icon that is at the bottom of your screen. Now, we received actually some questions beforehand, before the call, and one of them was related to the supply agreement with the Cartagena plant, between the Cartagena plant and Summit. Juan, could you please give us more context on this contract?
Thank you, Indira. Thank you for the question. I mean, this is a 5-year supply agreement from Cartagena to the Summit operations in the US. We have 500,000 tons per year at import parity prices going into Houston and to the ports in the eastern part of the US. renewable after year 5.
Thank you, Juan. We had a question from Julian Ausique from Da Vivienda. Julian, I don't know if you're still interested, because I've seen that you lowered your hand. Okay, here you are again. Please go ahead.
Hi everyone, and thank you for having my question. My question was regarding about the possible benefits that we can have in the Colombian and the Central America operation. With this agreement, you already answered the benefit that can have the Colombian operation, but I don't know if there is any possibility that the Central America operation will benefit from the agreement, like the one that you mentioned already with Cartagena.
Thank you, Julian. I mean, as part of the strategy of Cementos Argos, we started building last year an export platform of aggregates out of Central America. And we are foreseeing opportunities to increase that platform out of not only Central America, but also out of the Caribbean. There is a significant demand for aggregates in the coastal US markets, with a scarcity of aggregates in Houston and in some other markets in Florida, Georgia, and all the eastern coastal states of the US. So we are foreseeing an opportunity not only to export cement, but also aggregates and puzzolans in the future out of Central America and the Caribbean.
All right, thank you. And I would like to ask you also if there is any strategy about the efficiencies in Colombia and in Central America added to the ones that you already have done during this and the past year.
Yeah, Colombia, Central America, and the Caribbean will benefit not only from the ancillary agreements. I mean, the IP agreement is going to be very important. SUMA providing services to a company listed in NICE is going to be as well a very interesting opportunity. And we are foreseeing more opportunities to continue optimizing the operations in Central America, the Caribbean, and Colombia going forward.
Thank you, Julian. Next question comes from Yacine Touari from Onfield.
Yes, good afternoon, ladies and gentlemen. Two questions. Firstly, we've seen a big decline in petcoke cost over the past few months, partly related to the fact that it's difficult to export petcoke very far away because of a higher freight cost. And the question is, like, is it something that is going to be visible in the coming quarter, this big decline in petcoke cost in the US operation? Or are you using other fuel? And then my second question would be on the usage of cementitious material. Do you see an opportunity to export some cementitious material that you could extract from the Caribbean island or from Central America to the operations of cement materials in the US in 2024 or in the medium term?
Thank you, Justin, for your question. I mean, the only operation in which we use petcoke is the integrated plant that we have in Honduras. We don't use petcoke in our operation in the US, nor does Summit. What we are seeing is a significant opportunity to increase the use of alternative fuels in the footprint in the US due to the significant success that Summit has had with the use of alternative fuels. In terms of SCMs, we see an opportunity to export puzzolans out of Central America and the Caribbean to the US, but also we see an opportunity to develop the calcine clay business in the US now under the combined platform. So that is going to be one of our key components of the strategy going forward.
Thank you very much.
Next question comes from Stefania Mosquera from Credicorp.
Good afternoon. Thank you very much for the presentation. I have two questions, actually. The first one is regarding your cost of debt. What are your estimates of cost of debt after you have paid or you have used the proceeds of the transaction to pay some debt? And the second question is related to a possible inclusion in the MSCI Colombia Index. According to our calculations, Cementos Argos is complying with the liquidity and the market cap to be part of the index. However, we will still see some space to be or to reach the adjusted market cap to enter the index. So have you thought about any initiative to increase the float of Cementos Argos? Thank you very much.
Thank you for your questions, Stephanie, and Felipe will answer both of them.
Thank you for your question regarding the change in the cost of debt. As we mentioned before, we're going to use the full $1.2 billion in cash to pay down debt. This is gonna decrease our overall interest expense by around 70% on a run rate basis. The relative cost of debt is gonna increase, given the fact that we are prepaying all of our US debt, which I mean the debt that was issued in the US, which has a lower cost. Next year, though, by the end of this year and next year, we do expect that the cost of or total interest expense to be reduced by around 3/4 when compared to 2023. Regarding the inclusion in the MSCI index, we're definitely aware of that possibility. We are working on multiple initiatives that will help us improve our overall performance, so we can be included in the index and improve our liquidity going forward.
Thank you, Stefania and Felipe. Next question comes from Sebastián Zárate from Corfi Colombiana.
Juan Esteban and the Cementos Argos team, thank you for the call. I have a question regarding the supply agreement. You said previously there's a compromise that's around 550,000 tons of cement, but I can see that the exports for the third quarter last year were 333,000 tons. Regarding the ongoing demand and increasing demand on US states, where you said on the coastal states, on the eastern coast, and as well as the southern states, do we have like an estimate of how much our volume in tons is going to increase year on year for the next 5 years until the end of the supply agreement?
Thank you, Sebastian, for your question. I mean, we are maxed out of export capacity at our Cartagena plant. The maximum volume that we could supply to the US is the 500,000 tons that we signed in the supply agreement. All the other volume is going to Puerto Rico and other islands in the Caribbean. So the reality is that we don't have more capacity out of Cartagena. The US is currently importing close to 20 million tons of cement per year. So the reality is that going forward with the combined footprint, there is a significant opportunity to increase capacity at some point in time out of Cartagena to be able to supply more than the needs of that will be the needs of the combined entity going forward. But for the first 5 years of the agreement, that is the capacity that we have out of Cartagena.
Thank you.
Thank you all. Juan, we have no more questions.
Okay, thank you very much to all for connecting to this conference call, and looking forward to the conference call to present the result of the closing of 2023. Have a great day.